What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. What's up? I'm Dan Fredenberg, and this is another Chance Encounter. I'm joined today with Marquise. How you doing today, Marquise?
Good, Dan. How are you?
I'm fantastic because after all, I don't know if you know this, but my very favorite audience member has joined us today. And why is my favorite audience member here? It's because this is a Chance Encounter where I interview commercial real estate syndicators, investors, buyers, sellers, and all that sort of thing. And you might ask yourself, why would you do such a silly thing? Well, if you've ever heard of an off-market deal, also sometimes called as private deals or 506B syndications, then you should probably know that the SEC requires that you have a documented prior substantive relationship, or else they'll get ants in their pants, and that's bad. So I have people onto this show. I find out what is their level of sophistication, appetite for risk, core competencies, and that sort of thing. And you get to learn not only how to effectively communicate on the subject of a commercial real estate deal, but you also learn how my guest fits into those deals. But before we get too excited about business, Marquise, do you want to say a thing or two about yourself?
Yeah, sure. Marquise Calvaros from Kentucky. I'm living in Columbia, South Carolina right now. Still active duty Air Force, but looking to transition into full-time syndicator within the next 2 to 3 years.
Excellent. I love it. I love it. So let's get into the motivations. You mentioned, being in the Air Force. So I got to say, but wait, check your eight. Marquise, I don't know if, like, I get that, planes is one thing, but I don't know if you can see through the camera and into the user's device, but somewhere down there, there might be this hideous subscribe button, and they should probably, okay, it's a dumb joke, but whatever. The 5 distinct motivations. I've spoken to all sorts, literally hundreds of syndicators and investors and whatnot, and we're all people. We all have our own unique why. But I found at the end of the day, those different reasons fit pretty cleanly into these 5 distinct motivations. And the reason why it's important to know that as a syndicator, someone who takes on investors and whatnot, is because you got to find out what's going to make the person stick around. Okay. So these deals take months just even to close. They take years to go full cycle. And so that's why it's so important to know. The first motivation that I find, some people, they are into preservation of purchasing power. What on earth is that? Well, some people already have a portfolio of assets and they don't have any kind of W-2 or job or anything like that. So the way they make ends meet is from the proceeds of ownership. Now, if you're already in that situation where you don't need to work and the things you own pay your bills, why would you bother going through the hassle of another acquisition? Well, there are a few scenarios. One is if you've got inflation rearing its ugly head and eating away at the purchasing power of the cash flow, then it's time to make another acquisition. But generally, people in this situation will make their next acquisition if there's serious distress in the property, so they can buy at a steep discount. Also, if there's an asset crash. That's not really where I'm at personally. To describe where I'm at, I'm trading time for wealth. And that's because I got a background in tech, and specifically it's the CRM industry. So that's the online web funnels and web applications industry, accepting transactions, sending 5 million emails a month, that sort of thing. And I started doing that in the real estate sector in 2014 for a guy who had been doing 10 single family house transactions a month for years before he hired me. And I ended up seeing the tax advantages of going for equity, deployed capital, and saw what high wage earners, high salary earners are looking at. And I was going like, I really ought to pivot and figure out a way where I can be rewarded in the form of deployed capital for my effort instead of salary and paying a whole whack of tax. But that's too subtle for some people, especially youngsters, and frequently they want to regain control of their schedule. That might mean they want to hustle like crazy while they're young and so they can fast track their retirement. But other people, it's going to be they just want to work fewer months per year, or they want to work fewer weeks per month, or something like that. The main thing is they want to scale it back. And a lot of people who have this as their motivation, they think it's everybody, but I promise you it's not. For example, the super ambitious people, they want to buy their entire hometown. They're after that generational wealth. They want to make sure that their great grandchildren never have to hold a day job. And that's why they're going to keep on making acquisitions and doing more and more to build that net worth. It makes them fantastic members of the GP team because you know they're going to keep hustling into their 90s. Now, the last group, they're also going to keep hustling into their 90s, but their motivation's a little bit different because they've picked maybe it's a sector of society, maybe it's animals, maybe it's the environment, maybe they just want to send people to space. Regardless of what it is, if you want to make a big impact, there's a financial component to it. So that means you have to have some serious finances behind you, and that's why some people are investing in these commercial real estate deals. So, Marquise, as far as those five different motivations, what combination of those stood out and you'd say describe you best?
Yeah, I was gonna say definitely a combination, but probably top three for me is gonna be the fast track to retirement. Like in the military, everyone told me like, oh, you can do 20 years and then you can retire and then blah blah blah. I was like, well, why don't you do 20 years? I want to do 20. But at the same time, I do want to create generational wealth, like be the one in my family. I don't know if you read Ed Mylett's book, One More. Or,
Mm-hmm.
yeah, but he talked about being the Neo of your family, like being the one. So that's like another thing I'm kind of attracted to. And then also as far as helping people who need it, like being African American, you don't see like a lot of African American like syndicators, or there's not a lot of education for African American real estate. So I want to be an ambassador as well as like an educator, like say like everybody can do this. So you don't have to be come from wealth or anything like that.
Absolutely, absolutely. I love that. I think it's so important for everybody of every race to, like extend their hand to those who are behind them because it's like when you know how bad it is when you're at the bottom or when things are rough, it's like it changes you. You can't, you can't look at people who are extravagant and lavish all the time and think that's
Right.
totally fine. So that's fantastic. But it's a business, this commercial real estate. It's an extremely mature one, and any business has risks involved. Commercial real estate's no different. And when I started getting involved in these deals, one of the things I noticed, if you ever get involved in a 506B deal, whoever the securities attorney was in the mix, and there really should have been one. If there wasn't one, that's a huge red flag. They should have insisted that everybody who becomes a partner, general partner or limited partner, they should have filled out this super invasive questionnaire with all these different financial questions on it. And one question in particular jumped out to me because of, my web background of building forums and also teaching and testing people to find out exactly if they understand the principles that have been taught. And the one question that popped out to me on that questionnaire, where I thought there was something, there was a problem with it, it was the tolerance for risk assessment. Because I felt like the different options in the answers, they couldn't give me actionable information. So I made my own one, and it's a fill in the blanks question. So, Marquise, there are many popular investment asset classes, but I think blank is too risky. So your answer can be inside real estate, it can be outside real estate, it doesn't matter. But what's too risky for you?
I think for me it'd be like the retail space or office space, like
Mm-hmm.
people who maybe franchises also, but I don't know. I don't know. I'm not familiar with franchising, but definitely like office space and retail space,
Mm-hmm.
or just because people are like everybody wants to do things from home. Like they want to work from home, they want to order from Amazon, they don't want to go do things anymore after like the pandemic. So I think that's a little more risky than
Yep,
anything
yep.
else.
I love that answer. Lots of people end up buying themselves a job when they end up buying a franchise or getting in that type of retail, and that's not the idea. You don't invest in something so that every Christmas and Thanksgiving you have to be there because nobody else wants to work. That's
Right.
a real drag. But Let's get on to the favorite deal metrics. There's a bunch of different numbers in these, and I gotta confess, there are plenty of syndicators out there who their job is to get you all excited, and then you talk to the underwriter who actually knows all of the numbers, who actually understands the projections and all that sort of thing. And they're the ones who are going to dig into every metric that I'm going to list off here in a second. But really, just to make it easier for people in the audience, if they have a deal in hand or if they get a deal and they know which metrics you focus in on, just to make it easier to discuss it with you, I'd like you to choose a few of your favorite deal metrics that you focus in on. And just in case anybody in the audience is listening and not watching, I'm going to read them out. So the first one is cash on cash. Next is IRR. Next is cost per door. Next is net operating income or NOI. Next is going in cap rate. So the price when you buy, as far as the cap rate goes. The loan interest, that's become especially important in the last couple of years with lower loans from a couple of years ago, more expensive ones more recently. And then average income, that's for the area where the property is located, the amortization period of the loan, the market versus the in-place rent, the population growth of the area, the sponsor record, which means how many deals have gone full cycle, what sort of experience they have. And the last one is waterfall or split, as in after the initial investment is returned, what sort of ownership distribution does that look like? So out of these 12 here, what really jumps out to you generally, Marquise?
So definitely going to be the going in cap rate. Try to get like a 6. I know that's kind of more rare these days, but still can be done.
Mm-hmm.
Another one is population growth, because we also kind of look for like job growth, because more jobs, population is going to kind of correlate with that. And then the market / in-place rents. This one is not as big, but still very important when it comes to like value add situations. But you don't want to buy a place that is already above the average in the market. So we'd like to be a little less, maybe like 100 to 200 off the market rate.
I love it. I love it. I'm just eating that up like a subscribe sandwich. Isn't that intense? Every time it's the time it kills me. But that's how I know it's time to bring out the Dan Does Deals Commercial Core Competency Cube, which has the 6 different roles in a commercial real estate deal. If you're looking at this and saying, wow, I bet you I'd really be able to communicate effectively on the subject of commercial real estate if I had one of those, well, there's great news. They're free. You go to dandoesdeals.com. You can see a button with my face on it, and you can download it and print it out. And like a complete dummy, I didn't even ask for any contact information, like an email address. That's the cardinal sin of marketing. You always have to ask for contact information in return for your freebie. But what I'm up to is I want to make sure that you can effectively communicate on the subject of these commercial real estate deals, because if you ever make it part of your career or your investment strategy, your success is going to hinge on your ability to communicate. So in every episode, I go through all 6 roles, and the benefit on top of being able to learn these different terms is you get to understand how my guest fits into these deals. So let's get started. A repositioner is how pretty much everybody starts in this industry, because they are acquisitions people. They're looking for properties to buy. So how do you do that? Well, there's a lot of paperwork involved and looking at a lot of different deals. What do you do with the paperwork? Well, the fancy word for it is you underwrite the deal. That means you do the math, you do the arithmetic, you figure out, first of all, is this property even making the amount of money that the seller / broker is claiming it is? Because anyway, the repositioner is called a repositioner because they're figuring out how can they find more upside. In other words, how can they make this property more profitable than it is right now? And they got a few different tools up their sleeve to make that happen. And the most unintuitive one is having a vast network of financiers. What's that all about? See, financiers are people who only deal with paper and money, and then people as a consequence of it. So they're not dealing with tenants, they're not on a GP team or anything like that. But the reason why every repositioner has to have a vast network of financiers or lenders is because if you can secure a more advantageous loan, that goes straight to the profitability of the building, okay? A cheaper loan means the building's making more money, so you got to know lots of people who have money to either invest or to lend. But the more traditional spot where the repositioner is going to look is obviously going to be in the operations to stop those Benjamins from going down the toilet. But of course, there's more to operations than just unclogging toilets and collecting rent and mowing lawns, shoveling snow if you're where I am. The other things that I provide as far as an operations wheelhouse, one is because of my web application experience, anything that is online, I can take care of. There's also content creation, so like messaging, PR, customer service, automation, I already mentioned. But the other one that's a little more unintuitive, you really have to understand when it comes to real estate, vacancy is the enemy. Okay. So you have to fill those units. And even if you're like me, I focus on 100 or units or more in the apartment complexes. And so usually when that's the case, they outsource property management to a third party. And so, why do you need more people? Well, you're going to need somebody with some serious marketing chops if that third party management just can't seem to fill the units. Those have to be filled. And so, that's one of the ways I can sub in as a GP. But there's only so much you can do with operations. So, the next place the repositioner frequently looks is they get a contractor team involved to do a value add. They're going to renovate the units, they're going to upgrade them and make them nicer because the next resident would be more than happy to pay more in rent than the previous one because the place is just plain nicer. But of course, you have to be careful with contractors because you can spend endless amounts of money on contractors. You can gold plate the toilets, but you're never going to make any money off of it. And if you're anything like me, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground to keep an eye on those contractors and operators to make sure that things are going according to schedule. They're not using substandard parts. They're not taking photos that are overly flattering where another angle reveals that it's all messed up. So once the repositioner, let's say the repositioner is you, let's say you're a physician or an engineer or an attorney, something like that, you get this idea that you and your circle of friends will each put together maybe 50K, maybe 100K each, and you're going to take over the local building. Well, when you turn around to the financiers and say, hey, I got this 350 unit apartment complex, it's tens of millions of dollars. You don't have, I don't know, tens of millions of dollars you want to lend us, do you? Well, there's one thing that I haven't mentioned yet, which is going to be the reason why they say no. And a lot of coaching and guru programs, they really gloss over this. So this is the part you listen to carefully. They're going to ask, who's the sponsor? Who's the KP? What on earth is that? So in that scenario where you've got your group of friends and you got enough of a down payment to take over the building, you're not going to be eligible for a commercial loan unless somebody in the fold already owns a similar asset. So if you want to take over a 350 unit apartment complex, you got to have somebody who already owns a 350 unit apartment complex. And then on top of that, you also need a certain amount of liquidity. And then amongst the ownership team, you need a balance sheet of at least the amount of the loan. But if you've got all those pieces, you've got yourself a commercial real estate deal. So Marquise, I mentioned before that everybody is basically a repositioner and has some sort of financier relations they have to do. I imagine you're going to do some local work, and that's great that you're in South Carolina and from Kentucky because those are great markets. But I don't want to put words in your mouth. Which boxes do you think you're going to check in your next deal?
So definitely will be similar to you, like operations wise, being a higher ranking military member. I feel like managing a lot of people, kind of, yeah, but basically managing the manager or the property manager. So that would be definitely one of my strong suits.
Mhm.
For the KP or the sponsor, I work with Infinite Capital and Deal Estate. So they have a sophisticated team of like people who've been doing this for over 20, 30 years. So like they all have experience and also have the wallet to cover it,
Mhm.
and kind of leveraging that same type of offer. Like the financier, we have a big team of like investors and financiers that that everyone needs to use before in our program, and then so we have access to all of them. Those are probably my top three.
Sweet. I love it. I love it. So the next question is about your buy box then. And when investors or syndicators are asking what you're looking for, what's your ideal property, we're asking about three main things. First one's geography. Where is it? Which state, which county, which neighborhood? It might even matter. Okay. So, but the geography is definitely going to count before you call a property ideal. Second one's going to be size. Most of my guests on this show are in multifamily, which means apartment complex investing. And the way that you define size in apartment complexes is by unit count. And the reason why it's absolutely important to know that among the people who you're thinking about partnering up with is because the type of group that's going to take over 10 unit apartment complexes looks completely different from the type type of group that's taking over 100-unit apartment complexes. So that size definitely matters. And then, of course, other types of commercial real estate, like there's self-storage, there's mobile home parks, there's office buildings, all that kind of things. There's different ways to define the size. Sometimes it goes still by a form of unit like pads, and other times it goes off of square footage. But regardless, that size is going to matter. Now, the third one, though, I call desirability. The more common term is class. But I don't like the word class because it's talking about two completely different things, which I call condition and area. So when you're talking about condition, we're talking about how beat up is this place? What about the luxuries and amenities? Is it all like no frills? Is it, very like, blah blah kind of place, or is it a really fancy place where people really enjoy living? That's the condition. Now, when you're talking about the area, though, we're talking about the school districts where the property is located. We're talking about the crime rate where the property is located, and then the classic line that you always hear from brokers, real estate agents, or whatever. They say location, location, location. I don't like that saying because I don't think it gives enough information. What they really mean, in my opinion, is traffic, 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 which means if a whole whack of people are passing by that property every single day, it's going to be more desirable, more valuable. And so that's why that's the other factor when it comes to the area. But both the area and the condition, these different versions of class, they're ranked in the same way as in grade school, where you got A plus at the top, and then A, and then A minus, and then B plus, and so on. So Marquise, as far as you and your group, what's easier to say yes to?
So it's definitely going to be something 50 units plus. Trying to get in that sweet spot of like not too small, but not too big, where you have to really compete with like a lot of people. So trying to get right in that group. Going to be C to B class, a range. Also, like I said, looking in different markets in Kentucky where I'm from. So Bowling Green, Town, Louisville, Lexington, those types of places. And then as far as South Carolina, we look like North Charleston, Myrtle Beach, and a couple of spots in North Carolina, but we need to do a little more digging on for there.
All right, I love it. I love it. So let's talk people next then. My favorite thing about commercial real estate, there's lots of different people. We're always trying to build teams because nobody's going to be all six roles for any meaningful amount of time. Everybody's going to bear down on one of those roles or one or two and really knock those out of the park. Me personally, because of my tech background, my marketing, and all these other different skills, I need people who already have started on their real estate journey in a lot of ways. So frequently it's the sponsors and KPs I'm most eager to speak to because after all, they're the kinds of people who have the list where a guy like me can make a really huge difference. Whereas when you're first starting off as a local or a repositioner, you need grunts. You need people who can put in 80 to 120 hours a week. And that's not me at this phase of my life. So that's why the sponsors and then also the locals I'm eager to talk to. So Marquise, as far as you're concerned, I don't know if it's other service people or when it comes to financiers, if you have any 506B deals that are live, you're not allowed to mention them specifically, but you are able to say you're interested in talking to more financiers. But who's out there in that camera who might be perfect for you?
Definitely going to be some contractors. That would be nice to get some more people on the construction side. Also, definitely be looking at, you can never have too many financiers, in my opinion. You can never have too many options to choose from.
Mhm.
And then anybody, I guess, other repositioners or co-GPs possibly who have different insights on different markets, but kind of like you said, people who are boots on the ground in different places.
I love that answer. It's a great answer because like even billionaires are still sourcing deals and sourcing capital, so it's definitely a thing. So the that brings me though to how do people reach out? And unfortunately, I've got this super distinct last name. It makes me really easy to find on LinkedIn, which is the social media platform where I spend most of my time. But if you have your phone handy, you can scan this QR code right there. And that takes you to the FAQs page of 506BME, which is the service that I offer to document your substantive relations between your different investors, which is exactly what the SEC is going to require of you if they ever audit you. The penalty of not having it on hand, maybe if your laptop fell in the bathtub or something like that, is they can yank your exemption, which means you have to pay everybody back plus interest. And if you can't, then you're going to be fielding criminal allegations of fraud and you're going to wind up in an orange jumpsuit. And that doesn't work for me. So 506BME is one of the options you can have to help you make sure that you stay in the good graces of the SEC. But Marquise, as far as you're concerned, like I see the stuff in your background, but as far as like phone, email, website, social media, what's the best way for people to reach out to you?
Yeah, definitely email the Marquise at infinitecapital.ai. My LinkedIn profile is just Marquise Cobb. Should be not very many. You'll see my face on there also. And then website, you can go to dealestate.ai or infinitecapital.ai.
All right, I love it. And that brings me to the last part, which is actually not for you, Marquise. It's for you in the audience. It's my public service announcement. If you've been watching this episode and you've been experiencing searing pains in your eyeballs, maybe like migraine-like symptoms, I'm really confident it's because of the hideous subscribe button, which you can get rid of for free. I'm biased. I want a lot of people to click on the subscribe button because then YouTube might actually start paying for these videos instead of me. I think that'd be amazing. And just full disclosure, what it means to you is my videos might show up on your list of suggestions, but frankly, you can go ahead and ignore those suggestions. I just appreciate the fact you spent this time with me. Just like Marquise, I'm glad you joined me today. This has been great.
No, yeah, this is so fun.
Awesome. Thanks. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506BME or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, and all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.